Hello viewers. Today in this video we will learn about buyback of shares in stock market. So, first question that we should ask ourselves is, what is a buyback? A buyback allows companies to invest in themselves. Reducing the number of shares outstanding on the market increases the proportion of shares owned by investors. A company may feel its shares are undervalued and do a buyback to provide investors with a return. The share repurchase reduces the number of existing shares, making each worth a greater percentage of the corporation. The stock's earnings per share thus increases while the price-to-earnings ratio decreases or the stock price increases. Companies often award their employees and management with stock rewards and stock options. To offer rewards and options, companies buy back shares and issue them to employees and management. Let's look at an example of a buyback. A company's stock price has underperformed its competitor's stock even though it has had a solid year financially. To reward investors and provide a return to them, the company announces a share buyback program to repurchase 10% of its outstanding shares at the current market price. Now, let's see the advantages of buyback of shares. First, we have share price appreciation. Companies that are below their average industry profitability enjoy better share price appreciation after purchasing shares than companies with profitability above their industry average. Next, we have indicator of company strength. Rentable and development businesses that repurchase shares are a direct indicator to investors of the company's strengths. For the disadvantages of buyback of shares, we have manipulation and fraudulent activities. Buyback might encourage unscrupulous promoters to use the money of the company to increase their stakes. Further, it could distract the funds of the organization from productive investments. Why do companies buy back their shares? A buyback allows companies to invest in themselves. If a company feels that its shares are undervalued, then it may choose to go for a buyback to provide investors with a return. The share repurchase reduces the number of existing shares, making each worth a greater percentage of the corporation. Another reason for a buyback is for compensation purposes. Companies often award their employees and management with stock rewards and stock options, and a buyback helps avoid the dilution of existing shareholders. Finally, a buyback can be a way to prevent other shareholders from taking a controlling stake. So, how is a buyback done? A company can make a tender offer at a premium over the current market price to shareholders where they have the option to submit all or a portion of their shares within a given time frame. Alternatively, a company may have an outlined share repurchase program that purchases shares on the open market at certain times or at regular intervals over an extended period of time. A company can fund its buyback by taking on debt, with cash on hand, or with the cash flow from operations. Following are the SEBI guidelines on buyback of shares. The pre- and post-shareholding by the promoters needs to be disclosed by the company. The shares bought back has to be destroyed within 7 working days. The company is not allowed to issue the same class of shares for the coming 1 year post-buyback. Following are the impact of buyback of shares. The number of shares outstanding goes down due to the buyback of shares. Buyback leads to the increase in earnings per share. Since it reduces companies' outstanding shares, the impact is clearly evident in per-share measures of cash flow and profitability. It also leads to increase in stock price in the market. Generally, the buyback is looked upon as an increase in confidence of the promoters in the share. The share buyback is a great way to increase the shareholders' wealth over time, even though they have a higher degree of uncertainty than dividends, since the repurchase's value depends on the future price of the stock. That's it for today, and I hope you found the video useful. You can contact us from the details mentioned on the screen via missed call, email, or WhatsApp. Thank you for watching the video to the end. Please do like, share and subscribe our video for the latest updates in the stock market.